This is the Friday, September 13th, 2013 version of the Market Plus segment. Joining us now is Alan Brugler. Alan, welcome back.
Great to be here.
Well, we've got a bunch of great questions from our viewers submitted via Facebook and Twitter. One of them here, Rodney in Edgar, Wisconsin, wants us to take a look at the bigger picture, looking around the world. He's got two questions for you. How much will Brazil's corn crop affect our prices? And will China buy corn and beans from some other country before they buy from us?
Well, those are great questions. Let's talk about the safrinha corn crop. That's what the second crop corn is called. Brazil did have a record crop. They've got some logistical issues getting it out of the interior and out to the coast, and so that slowed the impact in terms of hitting the world market. But to show you how bad it's come, there were reports this week that in the interior of Mato Grosso, which is the furthest away from the ports, cash corn was going for $1.79 a bushel. All right, which is considerably below the U.S. price.
Yes.
Now, the government actually has a support program that's in the $2.30 to $2.50 per bushel range, so you wouldn't see anything quite that cheap hit the world market. But just illustrates that there is an oversupply of corn in Brazil. It's going to want to leave the country. As you know, some South American corn was coming into the U.S. This year because of our drought. I think that's, and our tight stocks. That's going to stop because we've got a big enough crop and the logistics just don't work. But they are going to be competing with us. Some of our traditional buyers are going to say, oh, you're practically giving away this Brazilian corn. We'll take some. What we think is that's going to slow our first quarter exports, our CEPOC-NOV exports from what they would otherwise be. We do have a tremendous forward book for both corn and soybeans for 2013-14 crop year in terms of exports, but the South American leftovers, if you will, are going to eat into the sales at the beginning of the year.
Now, looking again at, I was talking to a guy in a meeting, and he had been over in Korea, and he said there were a number of mills over there adding the necessary equipment to process the coarser South American corn. Is that a change happening in a lot of places? Are making the adaptations necessary to handle both U.S. and South American grain?
I think if they know that the cheaper product's going to continue to be available and they think that it works well in their products, yeah, they're going to make the investment. You won't do it for a one-time scenario. Sure. And that's kind of the key here for the U.S. is we need to get competitive before too many of those end users have made the equipment investment. Because once they have the investment, yeah, we've got to use it.
Right.
So I think prices is ultimately the leveler here. The South American guys can't make any money at $3 corn, and neither can we. So somebody needs to be discouraged. I would argue the rally in beans this week and the sell-off in corn is basically telling the South American guys, yeah, switch a few more acres to beans, pull back a little bit on the first crop corn, and then they'll look around later and decide what to double crop.
Okay, and the follow-up question, looking if prices are relatively comparable, will China prefer to buy corn and beans from some other country before us, or are all they looking at is the price tag?
Well, they're looking at price. They're also looking at logistics. Okay, it was pretty well advertised this spring that you had a 45 to 60-day vessel wait coming out of Brazil.
And is that going to be the same here looking at the second crop corn?
They're maxed out. Now,
okay.
They've got fewer beans to ship now. The bulk of those were shipped out over the last 4 months, so that there's some birthing capacity that'll be available for corn that wasn't before. But China's looking at the logistics of needing to bring in soybean case, the USDA's got them forecast at 69 million tons for this coming year. All right, that's over 5 million metric tons per month that have to come into the country. That's a big sucking sound in the global market. And if they can't source it out of country A, they're going to source it out of country B. Now, there are other considerations. There's political issues. There's currency translation issues. You know, how far does their yuan go against one country or the other? What's their current account balance? Do they want to spend dollars, or do they want to spend reals or pesos?
Certainly. So those are all going to be taken into
account.
account.
They're all pieces of that equation.
Okay. Now, another question, looking at the big picture, James in Kremlin, Oklahoma, is saying with wheat $1 a bushel under the world market, should we give up on seeing a rally?
I think we are actually not under the world market. We're over the world market. we're not competitive in Egypt, for example, by about 50 cents a bushel. It's pretty incredible that we're making as many export sales as we are when certain key buyers like Egypt aren't really taking any. But we've actually had a pretty successful program of making export sales to Brazil, for example, hard red winter wheat to Brazil to replace some freeze damage that they had down there. Soft red wheat to China to go into their feeding program or into their reserves. So I think we're looking at a 4-year low in global ending stocks for wheat due to a fairly aggressive feeding program around the world. We're looking at a 5-year low and potentially in U.S. ending stocks. Eventually, that's going to result in a rally because we're discounting it, we're getting the product moved. Once it's all got a home, then you start to see a little bit of a comebacker on the price.
See people kind of come back, start looking at America a little more closely,
right.
Go from there. Now, before we let you go, the other big piece of news in the ag market this week was something everybody's talked about. We'd like to get your final thoughts. The Shengwei purchase of Smithfield was approved this week, or is the first level of approval. So it looks like it's going to happen. Is there any other news or story to come out of that purchase? What do you expect as we look down the future of this?
Well, there's still a little bit of resistance there. They haven't had the official shareholder vote. They've just gotten the regulatory hoops in line. My understanding is there's at least one major shareholder who's trying to organize a buyout that would generate more money buying the pieces than Shengwei is paying for the whole.
So it might not happen at all?
It might not happen, although it's a very tight time window for this outfit to organize their troops, so to speak. If it goes through, obviously, Shengwei has a more direct pipeline to ship U.S. pork into China should the economics dictate. There's been all kinds of discussions over the last couple of months about the technology and who learns what from who, but it certainly makes it easier politically to ship pork in when one of the major players is a Chinese company. And my understanding is the principal of that company is also a member of the National People's Congress in China, so he's got connections.
An inside man.
So, yeah. So I don't see it as a real negative as long as you're across the ocean. You still have to live by U.S. food safety rules and EPA rules and everything else. So let's just find buyers for that pork.
All right. Thank you so much, Alan. Appreciate you being with us today.
My pleasure.
And thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we will get expert analysis for you. Thanks for watching. Have a great week.